Good morning, afternoon, and evening, traders. Welcome to March of 2021. Crazy how fast this year went by already. I hope you all had a fantastic month of February and are getting ready to rock and roll into the new month of March. Before jumping in, as always, taking a look at a couple things coming up in March that may throw some spanners in the works, if you will, seeing what kind of big news announcements are going on, what big things are happening across the board here. So from the holiday perspective, we don't have anything. We actually skip March as far as holidays, so that part is relatively nice. Don't have to worry too much about that. As far as the news calendar, well, we've got a few more things going on that definitely stand out. Right at the beginning of March, going in on Monday, we've got the ISM Manufacturing PMI, which is forecasted at 58.7. Then we get a little bit of a break on the 2nd. We go into some medium news on the 3rd. Larger news back on the 4th with OPEC JMMC meetings, and oil is definitely in the headlines. We also have Fed Chair Powell speaking, and then going into the 5th to end that first week off with non-farm employment. So, just a few announcements going on there on that first week. Going into the secondary week, we don't really have a whole lot then. We've got on the 10th some news at 8:30 with the CPI, and of course that would be a Wednesday, so it's crude oil inventory day as well. That's really about it for the second week. Going into the third week, we've got a bit more. On the 16th, we've got some big chunks of news of the core retail sales and just regular retail sales. Wednesday, the 17th, we've got crude oil inventories, and then 2 p.m., FOMC economic projections, FOMC statements, federal fund rates, FOMC press conferences going on there as well. So that is probably the big news for the month happening there on the 16th and 7th. Well, mostly the 17th. On the 18th, we've got some medium news there with the Philly Fed manufacturing, and then we've got a bit of a break going over the weekend into that Monday and Tuesday. Wednesday, we've got some medium news announcements, and then you can see the rest of the month, we actually end the month off with more medium news announcements. So really, the 16th, 17th, those are the last big days of news, and 17th is the big one that we've got going on. Now, obviously, we are going into the third month of the year, and that, of course, invokes options expiration, but not just any options expiration. We're talking quad witching options expiration. So what that means is we're going to be looking at the third Friday of the month. Well, the first day of the month is the first. That means that we are going to be starting off with a relatively quick upfront options expiration, which is going to be on the 19th. And that's that whole week, the 15th through the 19th is going to be that entire expiration week, and typically where things are going to be a little bit weird. First up on the list, we have the NASDAQ, and taking a look at what is going to be a common theme across the board with these one-to-one deviation moves to the upside. Essentially, we're taking this move from the bottom that worked its way all the way up to the top and then deviated itself even further above that to really kind of demonstrate the amount of strength that it's got going on here. So from the low to the top, and then an exact same one-to-one move back to the upside would give that deviation objective towards the highs. In this case, on the NASDAQ at least, it winds up to be right around 13,000. Fairly obviously, they're having a lot of trouble here. The market trying to go above, failing, but it's not really breaking down either. This is just more of a zone of contention. We've got a lot going on at the 13,000 mark, and realistically, this trend is still very bullish. There's no reason to believe that the buyers won't keep this going. But it does feel like it needs a bit of a pullback. Maybe to the bottom of the channel going into March would be kind of nice. We get a bit more of a dip down into the low 12,500s. Then we can kick things off a little bit more. Then we'd start dealing with a bit more of what could be considered a value pullback. If we look at the last move, the actual decent pullback move from top to bottom, then it'll being about 14.5%. If we look at the most recent move that's coming down, we're only at about 8.5%. So from a value perspective, we're pretty far away from 14%. I mean, that puts price all the way down at almost 12K. So we could be looking for a lot wider of a pullback, and it certainly wouldn't be unheard of, and honestly would be very useful for buyers to be able to reload. Then switching gears over to the S&P with yet another one-to-one deviation move, but this one is more of a projection. The market has not reached this point yet. So that does create kind of a saving grace. You know, a little bit of a concern with the NASDAQ being a bit overdone and just kind of running out of steam. But there are other indications like the S&P that still have wide open movement all the way up in its case to 45.73 That's a lot of room. I mean, considering that we're trading at 3,843, that's not too bad. There's a lot of room potentially to the upside for the market to keep going. And if we're looking at from a bottom of the channel to the top of the channel projection, we haven't even made it there yet. So out of all of them, the S&P still seems to be the strong one of the bunch. It definitely wants to be at least attempting to lead the pack. There are a few concerns, obviously, with MACD, divergence is going across the entire high here. Again, it just seems like it needs more of a pullback, maybe a quick dip back to the bottom of the channel. That would be very favorable. Buyers would be able to grab that dip down to 36.20 or so. If we're looking at it from a value perspective, the largest pullback before that was a 10.9% pullback. That little inside pullback dip there was another 8.5. If you look at where we are so far, we're only at about 5. So realistically, it could definitely use to go just a bit further. If we're looking at that 8.5, 9% zone, that puts us right at the bottom of that channel, and that would be prime spot for buyers to come right back in again. And then over on the gold market with, man, I don't even know what you want to call this. It's a bit of a megaphone and a bit of a channel. It's a little bit of everything. We've got this nice megaphone pattern that's going on for a while, and more recently blew off the top of it. After that blow off of the highs, that was that really strong attempt above 2,000 that obviously failed. But since then, there hasn't really been a reattempt. Usually when you've got those big levels, especially a psychological level, the market will try to get above it. And if it's going to fail, it'll kind of ping off of it a little bit or fail underneath it and then come back and ping off of it a couple times. We haven't had that. It actually missed it. And the only time that it really bounced off of it when it was already hanging around there anyway. There wasn't any necessarily signs of failure there yet. So realistically, that 2,000 level, I don't think we're done with that. We're probably going to be bouncing off that 2K level for quite a while, just to kind of finish off some of that unfinished business that needs to be taken care of. From the wider perspective, we did fail through the highs of the megaphone and then right back down to the lows, which would likely, or at least suggest, that more further sideways to slightly down price action would be the case, looking for the bottom of the megaphone. The bottom of the megaphone could be a couple different ways. This is from the lowest point all the way down there, but it could get narrowed up a little bit further, and that would put price relatively close to that one. I'm not a huge fan of that personally. If I'm looking at any type of market structure, I would much rather wait for the wider one, just in acceptance of the fact that I might miss the trade if it doesn't go that far. I would rather have everything in my favor instead, if that makes sense. And this is one of those situations where a lot of buyers are probably going to be buying in here. There's a lot of support. They have every reason to be buying in here. But for the traders who are looking for that bigger dip, that value dip, that the really nice one, well, we don't have that yet. We're not going to have that until towards the 1500s, which means that we got another $200 or so to go. Oh boy, over on crude oil. What a market. If I go backward a little bit, this chart doesn't even look sane. This is when you're looking at a logarithmic chart, that's because crude oil and keep in mind, this is the 0421 contract, has a low of $4, or no, $8 rather. So this is where crude oil slid to the negative 40s. It got obliterated, XYZ. So we do have to zoom in a little bit closer, just so that our price structure doesn't look so crazy. But as far as the overall momentum to the upside, we're back above the 60s. Buyers are obviously buying every aggressive pullback they can get their hands on. And there's no sign that there's a potential top coming into play. We just seem to be going up and up and up and up. And if anything, it really just needs a bit of a bigger pullback. All of these pullbacks, I really don't even want to call them pullbacks. It's mostly just sideways price action or flags. We didn't really necessarily pull back off of anything. So that being said, a nice actual pullback would be pretty nice. See them dip back below the 60s, get into like the 58s. Sub 58s would be very nice in terms of a value perspective, because then we'd be back towards moving average, just kind of a reversion to the mean, but we'd also be back towards the channel lows, back to the bullish L1, and we're back to an area that is at least a little bit more favorable. We've seen a lot of volume trade around the 60s as is, trying to break above it. after seeing this thing go screaming higher already, it's going to be tough to really make that stick. And then over on the euro, we have that 1-to-1 deviation higher once again. That places targets at 1.25265 in that zone. And that certainly isn't a small zone. That has been a big area of interest. A lot of volume traded hands inside of there. And it's not really a surprise to see the market fluctuating again while it's entering into that zone. What a surprise, right? Now, it does feel like we've got a little bit of unfinished business. So seeing a higher low or something and then kick the move off to the top, and then maybe V-top and roll all the way back over is a definite possibility. We do have a bit of divergences going across the top, showing or at least suggesting that the highs are getting a bit weak. Doesn't necessarily mean the trend is over, but it does mean that we need to be a bit cautious. I don't want to buy too high, especially with the underlying saying already to be cautious, and we haven't even completed the objectives. So if we're completing objectives and it's already told us before to be cautious, it's going to be that much quicker to jump ship once we start hitting those major zones. Just got a little bit of waiting to do at the moment. And then over on the cryptocurrency side of things with Bitcoin first, the last time we had a halfway decent drop on Bitcoin, obviously, well, that was halfway decent is kind of an understatement. That was almost a 73% pullback off of the highs. That's where the market fell off from, and this is where logarithmic charts are handy, fell off from the 13-ish thousand zone all the way down towards the 3,800s before rolling all the way back up. And that's where we've got that move towards, 50, 60,000. Now, if we're utilizing some of this previous information to our advantage, when this market was rallying higher, it put in a really strong three-legged move, and each one of those legs got successively larger or at least the same size. Along with that, once it did that, the first pullback was about 30.5%. Well, if we look at the last move to the upside, we've got the nice measured move to the upside, getting a little bit bigger and equal or about the same size, and we're seeing it pull back. What better place to see it pull back than an equidistant pullback from before at around 30.5%, and that lands price at 40,613.80. Now, 40,000 as a level in and of itself is no stranger. That is a big zone of interest, and that would be not really that surprising. Remember, all of the earlier traders who were stuck before were looking for 20,000. Well, if they got stuck at 20,000, where do you think they're going to gun for? They want to double their money, right? Well, they're going up to 40,000. And then from 40,000, it goes up to 60,000 because that's 3 times the money. It's not the math that I generally would like to use. I would rather do numbers in 10s, but that's just what the market is giving us. They're doing it in 20s. So we've gone from 20,000 to 40,000, broke above 40,000, went to 60,000. Now we're pulling back. If we break above 60,000, we'll probably go to 80,000, and then we'll probably go to 100,000, and we'll do it in 20s because that's what it's been doing. But the first pullback back towards 40,000 makes a lot of sense. If it does want to pull back further, there is that full flush all the way from the top to the bottom that did take well over, almost a year of trading, down to about 72.5%. And if we project that forward, that gives us objectives on Bitcoin of around 16,170. So for anybody who's long at 50,000, they're probably not too happy with me throwing that number out there, but that's just a projection, right? Don't shoot the messenger. I'm just saying what's on the chart here. But that is kind of something to keep in mind, where if the market begins to wedge or go sideways, that 30.5% pullbacks first, but if they can't break out through a new high, that starts kind of creeping into the back of my mind of, hey, where is that bigger one going to happen? And then over on Ethereum and logarithmic charts, making this look really, really weird, but we've got a 1-to-1 deviation higher. I know it doesn't look like it, but again, logarithmic charts, we've got the bottom price at 100 and the top at 1800. There's a really weird price difference inside here. But from the top to the bottom, when it initially pulled back, we had a 68.84% drop, and that is not even from the overall move. From the top to the bottom, that was a dip of 75.5%. So realistically, if we're looking from a pullback off of the highs, the initial flush before they really even saw any bouncing, I really don't even want to call that bouncing, it was about 48%. So if we look at where we are at the moment on Ethereum pulling back off of the highs, if we're looking for around a 48% dip before they'll likely find any type of support, that lands price right back at around 1,100. So sitting at around 1,100, 1,100 in that zone, well, realistically, that last time it happened, it only went sideways and then broke down again. It just kept diving all the way down until they really found the bounce point from top to bottom. That was about 68%. So if they don't hold that 48, 49%, then 68 is next. And if we project that out, that lands us at around $647. Considering that the Ethereum market placed a high in at 1,800, or well, actually a little bit higher than that, it went over 2,000. That's a pretty big deal. That's a big drop, and a lot of buyers will be very happy to pick on that dip, right? That BTFD mentality when it's dipping 50, 60, 70% when it's normally only dipping 15 or 20. Bargain bin prices draws a lot of people. There's nothing really suggesting that a high is in. There's no divergences. There's no concerns from that perspective. It's just really, I mean, the market blew off of the highs. It hit a major psychological level and we're pulling back. It wouldn't be a surprise at all to see it dip down towards the 640s over the course of the year. But it also wouldn't be a surprise to see it start getting stuck at around those 1100s and then go screaming right back up to the top. All right, well, that's going to do it for this one. I hope you had a fantastic February and you have an even better March ahead of you. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, we'll see you all then. Thanks.